La la la. Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. All right, let's see what we got going on today. I see, first thing I saw, I actually looked around at the currencies a little bit this morning. Not all of them, but I did look at more than usual. In other words, I didn't look at every one of them on our Dukascopy day week forex page. I looked at like a dozen of them. I think we have like 24 of them up there. But it was interesting. As you can see there, the Swiss is going back to the top of the range, which is what we were a little surprised at. We thought when we started this action here on the Swiss, we were thinking that it was definitely going to try to pull itself back down to the low end of the range, and then that interest rate. Oh, let's kill that volume there. There we go. Yeah. So, I was like, I thought that then the interest rate shift came right there, and we've shown you that a few times when we go over to the, the 30-year bond or something like that, or a 10-year bond. You can see the same thing, that shift that occurred. Let's see, let me put it right there like that, so you can see that shift right here that popped up was this right there, that slammed down. And that seems to have laid the course now, in a sense, to what's going on. We're only talking about, really, when you think about it, it's not the most dramatic thing in the world, and that is that we're looking at quarter or half point increases here or there. Nothing major. I mean, we're at right now. It's yielding a little over 210 or 205, something like that. It's only going to go to 3. So I mean, it's maybe to go to 3.5. But will the market really be upset if we see inflation backing off? I say no, because it's like a seesaw in some ways. The weight on one side, the same amount of weight on another side of a board, centered, and then you put the weight of one on one end and one on the other, and they sit there natural. And if you move one of them a little further in, then obviously the one on the end on the opposite side forces the board to go down on its side. So, I don't know if the interest rates are going to have that much of a negative an effect. I don't think it's going to, really, because it's not going to go up. It's not like we're going to see 21% interest rates. We're only going to see probably anywhere from 3.5 to let's put it this way, 3 to 4%, something like that. And as they unwind and grow at the same time, if Mr. Powell actually follows through on the original work of Bernanke by ending this whole thing, then it'll sop it up, and we won't have all this money flying all over the place, which is forcing the inflation to begin with. So, just a little kind of thought there that justifies. What did I just grab? Did I grab that? I must have grabbed that. Yeah, so I think I have to move that back up a little bit. Right there we go. And so that's where we're at. You can see it's playing with it right now. The dollar is basically firming up. We'll see how long that lasts, because it's obviously at the top end of the range. So maybe a couple more days of this. You can see the weekly has went into the weekly buy last week and was flirting, right? Even in here it seemed to be flirting with the sell. Now it looks very comfortable where it's at the moment. All right, over on JForex, see the same thing. You see all that strength. You see the white line piercing the yellow dashed line there, showing all the strength that we see here. The Manhattan, we'll call that the Manhattan indicator. That's right, we didn't Google that yesterday. Is there such a thing as a Manhattan indicator? Let's take a look and see, for the fun of it. Yeah, I think that I need to talk to Janos about that. Manhattan indicator. Let's see. We're doing it now. Indicator. There we go. No. Nope. Nope, there isn't. So I think we declare this the Manhattan indicator. named after the team that built the two nuclear bombs. Yeah, exactly, and that's where we're at. The Manhattan indicator, right there. Oh, that's not it. That's us. Ooh, that's still wrong. There we go. There we go. So that's the Manhattan indicator, and it's basically saying, a lot of strength. You see that? It's pushing up, and we are at the top of the range. We'll see how long that lasts. If they, you can see here, one of them exploded up through it. That right there is about the range, and so it jumped up there for 2 or 3 or 4 days, and then rolled right over. Not even, was it 3 days? Got through it and then stalled out. So that is what we're seeing out of the Swiss franc, and that's the way the dollar is moving, because it's definitely representing the action in the dollar. Now, what's even more curious, though, is the fact that the Swiss is losing value against the dollar, but the other two are not. As you can see here on the cable is gaining against the dollar. See that? In other words, to be like the Swiss, remember this is GBP dollar, not dollar Swiss, so it's inverse. So in other words, this should be heading down to match up with the Swiss. It's not. You see, the cable is building strength, pushing up. Let's take a look at it on the Chicago quant there. Where is it today? Yeah, it's pierced through that Fibonacci line of the 0.38. We keep on thinking it's going to try to at least bang up against the green line there, which is the 5.0. See that right there? 5.0. Right there, 5.0. So, and I don't really think that it's unique in the sense that what we're seeing here is that the Swiss is backing off, and we talked about this at the beginning of last week, where there seems to be some type of lack. I thought the run to the Swiss at the time was a flight to safety. Inflation, unresponsive Federal Reserve in the United States not recognizing that there's problems. Referring to it as transitory for 7 months. Things like that, and that's why we jumped over to the Swiss in the mornings, because it was literally telling us something was going on, and the rest of the financial community was not. In the Federal Reserve side of it, I'm talking about, was not really taking it serious enough, and obviously it wasn't. But now, it is, and because now it is, they're selling the Swiss. And what they're doing is they're buying cable, the British pound, and you can see it here. They're buying they're even buying the euro. Not a lot, but they're buying it. It's trying to go up. Remember, this is the same way too. This is the euro dollar bearish trade, not the dollar euro. It's the inverse. And so you can see here the strength, and you can see the green hinkies. And you can see over here, you can see the same thing going on, the strength kicking out over in here. You can see the weeklies holding up. So it seems like the marketplace has rationalized that running to the Swiss is not necessarily necessary anymore. I guess that's what it comes down to. Which may mean we may see the top of the range pushed up a little bit, like it did before. All right, let's see. From there, we march our way over to the Turkish lira. Let's see what the Turkish lira is doing this morning here. Oh, we don't have the fact check spreadsheet. Put that up. There it comes. And let's get this filled in. And there's the dollar Turkish lira. There. Let's see. And on the fact check spreadsheet, right there, right there, where's it at? Oh, we don't. That's right. We don't have it on there anymore. We have the euro. So we're looking at 10 days in the daily buy right there. And you can see here on the dollar Turkish lira, same, lifting up, holding up. I kind of think that we've kind of we're tickling the top end of that range at the moment until they can understand what the free puts look like in Turkey. See that? Look at it. It's actually banging against it for days now. Look at that. Just banging against that line. That's the line right there. We figured that that's got to be and that's pretty much where the gap started, that type of thing right there. So that tells us that's the area that it's going to flirt with for a little while, and then they're going to try to figure out what the free puts that they're giving away from Turkey. And once they get that figured out, then I think we're going to start to see more action again in this product. But not until. Who knows? I mean, even if the concept itself doesn't kind of feel it doesn't have a lot of strength, if it can stop that volatility of the Turkish lira, in other words, make money be cautious instead of feeling like it can just crush the poor currency itself, that would be a good thing in its own right. Even if that's all Aragon, President Aragon, former Prime Minister Aragon gets out of that, that's pretty good in its own right, offering to pay for free puts to everybody who invests in Turkish lira. Now, when I read everything they published, it was a little kind of confusing on who gets the free puts and who doesn't. So we'll wait and see how that plays itself out. That's the answer. But he seems to have stopped all this action with that, so that's good. Because that's an inflationary thing. I mean, the poor country was getting clobbered in inflation. We saw, you can see it here. The product ran up to 18, basically. And now it's trading at 13, almost a little under 14. That's pretty good. And it fell all the way down to 10. So, wow. I mean, that helps the population out enormously. That's a winner chicken dinner right there alone. All right, now let's take a look at the euro, Turkish lira. Right there. And just as, let's see, where's it at? Right there. Just as on the dollar Turkish lira, it's rolling over. You see that right there. Let's widen that a little bit. You see that it's rolling over and trying to go back into the sell. The weekly is still holding up there. You can see that. And over on JForex, you can see that same type of action. It's trying to roll over a little bit, but it's not breaking this dashed line at the moment. So we got a lot of green hinkies. So again, bravo, Mr. Aragon, for finding a way to stall this horrible inflation that was exploding through currency translation. All right, let's see. From there, we go over to the Canadian right there, and you can see it. What did it do? It didn't really touch the top end of the range, but it does seem to be a little stalled at the moment. And it's in a daily sell for a few days now. It's 3 full days, going on a fourth. And that's line 20 right there. You see there's the 3 days. There you go, 3 days right there. And we're 2 weeks in a sell. You can see that pressure right there. Now let's check it out on JForex. There. See that same pressure. See the sell right there on the Manhattan indicator, right there. And you can see the red hankies. And this whole thing is what we refer to as the Manhattan indicator. Something we put together from yesteryear. And it has a very good correlation to our math. It helps out. It's a little lagging and behind. It's a lagging indicator to us, but to any other public indicator, it's definitely a leading or super leading indicator. No doubt about it. And then let's see what it looks like on a weekly basis. Right there. You see it's underneath, just like the Chicago Quant indicators, right there. 2 full weeks in the sell on a third. Same thing here. Couple weeks in a sell and 3 weeks in red hinkies. So that's pretty good. It matches up, gives you a good flavor of what's going on in the real world, not the theoretical world. All right. From there, what we normally do is we go and we look at the gold and the silver, because of the way the Canadian seems to roll. So let's take a look at that right there. Let's put gold up there. There's gold. It's nice to see it over 1800 again. When you really look at historically where it's been and how it's been doing and so forth and so on, not bad really, Let's go back and look at gold. As much as I say for short-term traders, gold has really been not very responsive. But when you look at the product, let's see how well Dukascopy goes back. Let's see, let's make it a monthly. When you really think about it, gold overall, there we go, that's perfect. Good example here. You have the financial collapse. There you go, there's 2008. Mr. Obama's adventure begins. And you have gold trading in the $600-700 area right there, right? And it does double. I mean, when you go and look at, say, the let's go take a look at something else. The equity-wise. Let's see. Let's find. I guess you could say the stock market has tripled. Let's put the stock market in there. Let's put the S&P 500 in there. But that's not too bad, really, in one way or another. It's still a wonderful. In some ways, you could say it almost tripled also. It went to 2,200 as the all-time high in gold. And, let's see, I think that's what it is. It's like 2,200 and something, 2,100 and something. So basically 3 times 7 is 21. So it's almost tripled. So it's pretty much kept up with the equity market. Let's take a look at the equity market. We'll take a look at the S&P 500 here, right there. And there it's loading. And so, it's gone from, in this case here, back in 2000, showing us, where was it at? So it's showing us at, it was at 1,500, 1,200 something, 1,300. Now we're at 45. So it's almost quadrupled. It's almost 4 times more higher. And let's see what the Dow Jones Industrial Average looks like right there. Let's see how far back that goes. And so the Dow was trading in the 15,000 area, in 2013. We would love to have back to 2008, and now it's trading at 36,000. So, gold has done okay, Problem is that we expect a lot more out of it on a day-to-day basis. I think that's what it really comes down to. I've come to this conclusion over the last 3 or 4 days. I've vacillated in my head about how gold is not the touchy-feely, sensitive alternative to the inflation factor, because here we see inflation take off and we don't see gold take off. But I think it becomes more of, I thought about it this morning more, and I thought, it's just not a short-term tool that satisfies the inflation factor. And that's what the problem really is. It's a long-term tool. And so, I was watching these advertisements that come across the financial channels. They advertise the metals, and they go, it doubled and tripled since, 2008. And I thought to myself, it has really. So there's not much to complain about, but the thing is that you're not going to get that action that we see in the stock market, because it's a much more long-term investment tool, and where the old time the money managers would make it a short-term tool. In other words, they would see inflation, they'd liquidate some stocks, and they would buy some gold to fill their portfolios to the right balance. The full balance I think was 5% gold, and money managers would bring it down to say 1.5 or 2.25% of gold in the portfolio when times were really good and inflation was low. And when inflation started to pick up, they would start raising that position up to 5% of the portfolio. So, I've thought about that, and I looked at it, and I kept on thinking, we have traders that play gold every day, and they're really disappointed in the action, and I'm disappointed too. You would think it would be more sensitive, but it's obviously not. And then I kind of thought, we've looked at Bitcoin. Let's put Bitcoin up there. And that's supposed to be an alternative to the central banks and inflation. And, it has done well. It's gone from, 2017, it's gone from, say, it was at zero one time, and now it's going as high as $70,000. So that's done really well. But now it's settling in, and the product is starting to balance out. And we're not seeing that. It's going to, in other words, I think what we're going to see is we're going to see gold, and we're going to see cryptocurrencies become slower, not faster. They're not going to jump up and down as much as they used to, unless there's real calamity that gives them that push. And when in doubt, it'll just sit there. And so we might not see, $1,000 gold ever again. And we may never see, a $25,000 Bitcoin again. But we may not see $70,000 Bitcoin again for years. Whereas everybody, I even saw somebody going into late November with Bitcoin at 60 some odd thousand, tried to tell someone on the financial channels, you're going to see 100,000, if not at the end of the year, at the beginning of the year. Instead we went from 65, 70 when they said it down to 40, 39. So it's starting to pick up those same characteristics, and that and that's the bigger question is, what is this product? What really is that? What are gold and silver when it comes to inflation and the lack of confidence in central banks and so forth and government policy? And what is the cryptos? They're probably about the same. So in other words, in the end, gold and cryptos will all become cousins. One will be a physical, and one will be a cyber blockchain, of information. And so then that's an alternative one for the other too, in many ways when you think about it. When you want something physical, you go towards gold, and when you want something more cybernetic and away from central banks and physical, you go towards the cryptos. And that literally could be the essence of it all. They're not currencies; they're assets. And I guess because you can transact it a lot easier in a Bitcoin or a crypto with blockchain, you can transmit like a Venmo or a PayPal. In essence, it made everybody think it could become a replacement for currency. But I don't see that at all, because currency is something you need physical. China's probably proving that point enormously. They don't have a physical currency, really. Domestically they do, but it's not external, and it's fixed. So it hinders China every day. And I guess then the Evergrande real estate situation kind of confirms it every day. And so, if you can't dig up $20 million, not 20 billion, not 20 trillion, but $20 million to smooth out your own real estate market, then what kind of shape is China in the beginning? And so that says to you, when you don't have a physical, and that's what the gold and the cryptos have become. They've become competing alternatives. One is a physical and one is not. And that's interesting. It's very powerful. In many ways, it's very powerful. All right, let's take a look at the energy market. Boy, I want to talk about a great alternative, something that the whole planet is buying every day. So talk about something that you want to tune in. They should create a crypto oil. That would be interesting to see what a crypto oil is. And as you can see there, that's a monthly. And it went to zero, no less. Boy, talk about if you want to put an analogy of gold and crypto or blockchain technology assets and physical oil. We got to a point where oil dropped to zero. It dropped to zero and actually went minus 30. The spot month moved to something like $39 minus. So someone would pay you $39 to buy an oil contract. You didn't have to buy the oil contract. They would give you the oil contract for $39. So that's an interesting, talk about trying to understand the physical reality of assets. That's what we do here every day. And our Chicago Quant Mathematics gives us a great insight because it's a really good proof, like a mathematical proof, on the accuracy of data. So this is a fascinating situation. All right, and at the same time, let's jump back to the daily, just to see what's going on with the relationship between the Canadian and the oil. And you can see there, it's firm. It's been firm for days. The line is underneath. It's in its cell at the moment on a daily basis. And over on the Chicago Quant situation, right there, you can see the oil contract right there, the spot, playing with the daily buy today. The line is pushing up. You can see there's a 6 now. It was a 7 a few seconds ago or a second ago. And it's plus above the zero line. And the weekly is firm, so there's no problem there. And this thing seems to be parking itself up in the 80 area. Maybe it's telling us that the world economy is going to get going, not stall out. I mean, when oil went to zero, the markets were terrified that the virus was going to become the next Spanish flu, and maybe we would lose, a third of the planet. I forget what the numbers were with the Spanish flu, but it was a big number. It was like 5% or 10% of the population died. Something crazy like that, 3%. Some big number. I mean, the COVID, not even half of 1% has died from that. It's a very small number. So you can see here, there's the oil moving up. You can see at the same time, and that's on the weekly. So it's matching the Chicago Quant right there. As you can see, it's firm, holding up, not letting go, staying steady, that type of thing. And the pressure is on. Okay, so yeah, it's a new day when it comes to understanding the metals and the Canadian and everything in my head. I was starting to really become dejected of late over the lack of fundamentals with the metals complex, where it missed calling the inflation. But maybe this inflation is not going to be that bad. Maybe in some ways, Mr. Powell, when he came out with these crazy concepts of transitory or whatever he called it at the time, may have been, maybe they know they can reel this in a lot easier than they did the last time around. That's possibly what it comes down to, is that they'll be able to literally bring in the inflation over the next few years very quickly. Maybe just the fact that the polling is showing that the Republicans and the adults in the room are going to have more power than they've had since the Civil War, which is incredible. Since 1860, the Republicans in the United States are going to have that much power. And so maybe we're going to clean up this mess, with this crazy spending and intimidation. And, think about some of the most rugged issues that we've allowed to fall apart. Things in Europe and other places in the world, like Afghanistan and all, that turned into just horrible results out of it all. So maybe the adults are coming back into the room, and maybe that's what gold and silver is trying to tell us. That's what the cryptos are trying to tell us. is that things are not as dire as we think. And then you think of the old saying from biblical times, darkest before dawn. Maybe we're at that point where it's the darkest before the dawn. All right, from there we'll run over to, we're going to go right over to the South African Rand, see what that's doing. And I guess it should be sideways pretty much for a while now. It's probably going to be trapped in that range. That's what I'm thinking. We saw it trying to move down. And we'll see what they do with this South African Rand. You can see it there. It's just sideways to down for a little while. Maybe the domestic policies will have more of an influence. Maybe it won't be the metals market. Maybe metals are just going to be sideways and firm for a while with just a little inflationary sweetener in the sense of, but overall, maybe this is it. Maybe that's what it's trying to tell us. We have had some traders in here that trade like middle-aged muscle, and are like, wow, why aren't we getting that explosive action? And I was like the same thing. If we're having inflation explode, why isn't the metals complex going up? Maybe it's not going to be that bad. Maybe that's what it comes down to. Maybe the cryptos, in many ways, when you go back and you look at, let's just show you the Bitcoin again. That's the crypto example. Right there. Maybe that's pretty much maybe what it's trying to tell us, is that things are just not going to be that bad. And in the fourth quarter, they thought they were going to be bad. They thought that inflation was going to mean something, and now they realize that the Federal Reserve rationalizes it, and maybe it's not that bad. Look at it; it's playing with this middle end of the range. Maybe we just need to read the actions itself and accept them. Maybe that's what it really comes down to. Ruble, dollar ruble pairs trade is impressive. It's trying to roll over, which is, obviously Doc always feels that way about the ruble. With all those resources in the Russian Federation and, the educated workforce and so forth, and the size of the Federation, you would think that currency would fall down into the 40s. You would think that it would become a much more competitive thing. Maybe when the Crimea and all that other issues start to wash away, and we, remember, it was really tough. A lot of, people don't take in consideration the fact that Mrs. Clinton and Mr. Obama tried to overthrow Mr. Putin. They tried to force a coup. They did the same thing to Mr. Gaddafi, and obviously we've seen how that worked out. They have slave markets now in Libya. So, when those two get a chance to put their hands on something, it can be really tainted in the end. So we watch the ruble, we cheer the ruble when it falls down. We like that. It actually falls up in value. It becomes more valuable. As it goes down against the dollar, there's less rubles needed, which is kind of always impressive. So we'll keep an eye on that one and see if that starts to tell us a true story of what our physical world around us is really starting to do. And you can see here, our weekly on the Chicago Quant is rolling over. See that? That weakness is really starting to develop this week with the daily sell that started yesterday. That daily sell in there like that. There we go. And let's check it out on JForex on a week-to-week basis. Right there. Yeah, and not rolling over yet. We're getting close. Oh, it hasn't started yet. It's still doing its weekly bounce up thing. We'll just give it another day or two, and I'm sure this thing might start, the white line, the Manhattan indicator might start to roll over. Let's see, now, from there we go over to the yen, see what the yen's up to. Right there's the yen. A couple days in a sell, 2 days in a sell total there. Let's get that little red line in there. And you see the line is turned up. Our weekly is still in a weekly buy. So I guess that was the profit taking of going to a 5-year high. And now we'll see if they try to roll that thing back up again. You see, same thing is going on here, down at the low end of the range. Look at that. Pretty good low. And here it's taking out that low, and it's challenging that low right there. So we're seeing some real attempts to turn the product itself. And then you can see the weekly. Let's see how it looks on JForex right there. You can see there on the weekly, it's still holding up very fine. Pressure is on the upside. All right, last but not least, out of the currencies that we look at each day, and remember, traders, you're welcome to ask any question at any time, and we will stop what we're doing and we will tune in and see what you're interested in. So, just to remind you, now let's go over to the Mexican peso. There it is. All right there, Chicago quant. It's 3 full weeks in a sell. You can see there, and on the fourth one now. Been in the daily sell. I guess it jumped into the daily buy for a day, and then went right back into the sell again. So we went. Where's that? Right there. And the next day we just went right back into the buy. And traders know around here who are experienced with Doc's work, you don't take the buy, you just cover your short, that's all. And because we're in a weekly sell. As long as we're in a weekly sell, you don't want to make the daily define the main trend. Let the weekly always define the main trend. And so you can see here it's just sideways drift. Whatever scared it with Mr. Biden having that meeting with Trudeau and the president of Mexico obviously is starting to wash away. So, let's see, where's it? Oh, let's see what the weekly looks like on this too. There's the weekly. I'm sure it'll be 3 or 4 or 5, something like that. Yep, look at that. 3, 4, 5, 6. Red bars down. Pretty good. This caught it nicely. Let's put the lines in there of the Manhattan indicator. You can see here it's been in a weekly sell going back, 2. There, it's 4 for sure, if not 5. Without a doubt, it probably is 5. And because there's this one right there. So 1, 2, 3, 4, 5. 5 full weeks pushing down on the Chicago quant with the Manhattan indicator. All right, that usually concludes my look of all the currencies. But if you have a currency you'd like to see, just shout it out. All right. From there, we jump over to. What did I just do there? No. Right there. From there, we'll go over to the metals complex and see what's going on in the metals complex. We saw gold real quick there. It was firm today. Let's take a look at the rest of the contracts. Let's see. There it is. So gold is firm. You can see right there. We'll put it up over here at the same time. Right there, firm gold. And you can see silver doing the same thing. Silver's putting that pressure on the upside. You can see, and on the daily in gold, you can see that the Manhattan indicator is trying to get it into the daily buy today. Yesterday, it closed in the daily buy on the Chicago quant there, you can see. And you can see it's been in the weekly buy these first 2 days of the week, so that's pretty cool too. Now, let's just check out, I bet the weekly buy in gold on the JForex probably never backed off. So it had been in a buy for was it 3 weeks, and it's trying to flirt with a red hinky, but it's not breaking the line. So it's the same as what we're seeing here in the Chicago chart. The weakness, and then boom, it's right back again. Boom. Whoa. Boom. Then let's take a look at silver. And put it up over here some time. Right there. Let's put it up as a daily. So you see silver's trying to lift up on a day-to-day basis. We're doing the same thing here today. You can see that right there. So we should have a line in that, shouldn't we? There we go. So you can see here the pressure is on the upside. You can see here the weekly, which did the same thing as gold, go into a sell, and now is moved back up into the buy with no problem whatsoever. You can see the daily here is flirting with the buy, like we are here. And let's see what the weekly looks like on this product. Right there. Wouldn't surprise me if the weekly has been a couple with the greens. Oh, no, red. But notice the lines have not broken down on the Manhattan indicator. It's holding up pretty well there. So it's not in the sell, even with the red hinkies. So, and that's the thrust of it all with the Manhattan indicator. There's the strength right there. That's the main trend right there. The main trend. Now let's see. That's the silver. Let's take a look at copper. Copper is jumping around the same way. Put the day, and let's get copper in there. Move our ways down in the metals complex here. You see, copper on our work has been in a buy. It's been choppy, but it stays in that buy. It's battling its way. So let's move that arrow around. Let's start with that arrow. So you can see here on the JForex, you can see it's trying to turn green here, and the line is moving up on the daily. Now we've been in a weekly buy, as you can see over here, for 2 full weeks, going on a 3rd week. It's battling to try to stay in that weekly buy with no problem. Let's see what it looks like on the JForex. You see, same situation as what we're seeing in Chicago. Same action. It's trying to push up. The Manhattan indicator is doing a fine job of keeping traders in the right direction. Truly a quiet day. And then from there, we're going to run over to, let's see what Mr. and Mrs. Platinum. Platinum, I think, went into a weekly buy last week? 2 weeks? Something like that. Where's Platinum? Right there, yeah, 2 weeks in a buy now in Platinum. So let's check that out. We used to, years ago, say that it was the canary in the coal mine, but it seemed to fall out of total favor. So you can see 2 full weeks here of strength. And you can see it's been in a daily buy since back here. Way back in, what's that, December 16th. It's been in a daily buy this whole time for this whole ride. Interesting action. But it hasn't really gone anywhere. I mean, it spiked up here up to 1,000, and now it's trading at 942. Not the greatest of a long trade, but it just is what it is, I guess. Alright, that concludes the metal complex. Let's check out the energy complex. And you got there's the oil as we talked about. Let's get it up on the screen here. Right there. You see that daily strength there. Pushing and pushing, refusing to fall back. Let's see what the lines look like on the Manhattan. Okay, so it's still on. Oh, what happened there? There we go. That's the next one. So it fell back a little bit, and we did the same thing here on the Chicago, as you can see right there. And then now it's trying to climb back into the buy. The weekly itself is holding up very fine. Let's see what the weekly looks like on this contract. This is the spot contract here. Doing the same thing, lifting up, just like we're lifting up right there. Now let's go and look at, let's do this, let's put the daily back in there like that. And let's go take a look at the spring crop of oil. Spring crop of oil. Here is the June contract, right there. And it never went into the sell. It's flirting with it today, but it didn't go into the sell. It's been in the daily buys for 3, 4, 5. This is the 6th day, and it's trying to break down a little bit right now. You can see it's minus 17 there. The weekly itself has been very firm. It's going on a 4th week of a weekly buy. So the back months are definitely much more in demand than obviously the front ones. Then from there, let's jump over to natural gas. Here's natural gas right there. And let's find natural gas here. And let's see, where's that? There's, that's natural gas. You can see this is the daily. It's been pretty firm. We're in a buy, but boy, is it bounced around in a very tight range. Keeps on trying to get into that sell. At one point this morning it was minus. You can see there it still is by 0.002. It was 0.007 when I put that line in there this morning. So it seems to be lifting back a little bit. And you can see the weekly has been in a weekly sell. Let's just show you there. The weekly's been in a sell since back here. And so that's like, it's like 11 weeks in a weekly sell. There's pressure on that. And let's see where the line is there on the daily. There's the daily. So it's in a daily buy. You can see that in the problem. It's been pushing up. Matching the Chicago style things here. And then let's take a look at the weekly characteristics of it. Like so. Well, we just showed you 11 weeks in a sell. I'm sure there's a sea of red, yeah? See that? Lots of red. Now look at that. The weekly is trying to turn up really aggressively in the oil complex after that, going into a weekly sell back in mid-October. So that's interesting. We'll see what that does. Maybe that's the beginning of something. I don't know. Because look at the spike down we have there. So on the Chicago side of it. And sometimes you get one of those spikes down, they try to lift afterwards, like you had here. Well, no, it's something to think about. Natural gas may find its way to go. Hey, Giannis, how you doing? So gas back up. American gas is so low compared to domestic gas. I mean, American gas is that's $4, basically a cubic foot, $4.1 basically. And what are they charging for it on the continent? Aren't they charging it near you? Especially over in Germany in that area, doesn't it get, what are they getting charged for, like $36 or $35? It's like 10 times more expensive, right? Or in the 30s, low 30s, something like that. It's still a big number no matter how you cut it. That's why the ships over here are going that way with natural gas stored. We've come up with a name with this indicator here. Yesterday we came up with the name of what this really indicator represents, and we call it the Manhattan indicator. That's what it is. So I looked it up, and there is no such thing as a Manhattan indicator. So if Dukascopy wants to take the slow stochastic and the fast stochastic and turn it into a one-time indicator, there you guys can you can have an indicator that Doc has helped to develop with Dukascopy called the Manhattan indicator. Let you check your gas bill. Have you looked? I guess I guess if you're looking at it and you're not thinking about it, it must be pretty much protected. Nothing normal. 1 pace square meter heating. All the same, huh? So it's just having an effect on Germany and in that area and the Ukraine, I guess. 75 euros. Okay. Yeah, you're right. Yeah, that's low, isn't it? because over in the Ukraine and Germany, I understand the price is much higher. They've set all-time records of up to as much as $36 a unit, a cubic meter. Energy in general, yeah. Over there, yeah, I'd probably, yeah. I guess they don't have the infrastructure, you know, they don't manufacture. They don't probably have the refineries and so forth. They're dependent on other countries. Yeah, I mean, we got oil now back up to basically $80. Can you imagine oil went to zero? It went to minus 39. Imagine that. How confused is our fundamentals now in the world markets? That oil was allowed to go to minus 39. I guess when you have 15 trillion in bonds in a negative, Russian, oh, you get Russian imports, and they must do it very easily to you because it's right there. You don't need a pipeline, do you? I mean, a simple pipeline on land, right? That's why I always think the ruble should be much lower. I am amazed at how high the ruble is when you think about the amount of natural resources the Russian Federation has. Underground, yeah, it's perfect. Cheap and easy. Compared to like, what, a couple 100 kilometers under ocean? That's got to be expensive. Yeah, I bet. That makes sense. I would think that you would have plenty of resources. That's, again, you know, don't you think that fundamentally the ruble should be lower? You know, because of all the infrastructure they have around it? By selling dollars and keeping profits outside Russia? That makes sense. It does. Oh my God. Taxes are so bad for business and economy, you know, for the population. You know, taxes really hurt the population. They don't help the population. Isn't it odd how everybody thought that taxing, you know, when we created taxes here in the United States under Woodrow Wilson, he only taxed the rich. Now they tax everybody. I got those duties to nowadays, no time to join statements on your YouTube. I hear you. Well, it was good talking with you. We will talk to you later. Thank you for jumping in and saying hi. All right, so let's take a look at Brent on the JForex. See what Brent's looking like this morning. Look at that. There's their strength there on the week to week to week, just like we're seeing in the oils contracts here in the States. Let's put that on there real quick. Right there. And at the same time, let's see what the daily looks like on the Manhattans. Oh, we don't see the. Let's see, where's it at? There it is. So there's the weekly. Now let's look at the daily. You can see there it's doing the same flirtation as we've been doing over here. Same ziggy zag. Now it's trying to turn up here, and we'll give this a few hours. You never know, this thing will start to turn back up again on the Brent. The Brent itself looks like it's holding up pretty well also. That's the daily. A little off from its highs, just the same way as the crude oil here is. And let's see what else we got going on here. So that's the Brent. I guess what we could do is go check out the stock indices and we'll call it a day. Because not much more is going on. There it is right there. Let's check out the Tech 100 right there. That had an incredible swing yesterday. That thing went down to, like, it was down 500 points. Came all the way back. So yesterday's low was 15.1, I think it was 152. It was 522 points lower. Let's see where she's at right now. See right there. Same thing. Off of that incredible low of, yeah, there it is. The low was 152.50. That was the low right there. Yeah. And then they bounced back. Again, the economy is not going to be that bad, and the interest rates are not going to go up that much. They're just going to start to tighten it a little bit. And then, and a lot of our inflation is from irresponsible government policies of the last 10, 11 months. So, you know, I mean, Mr. Biden had to, anything Mr. Trump did, he did the opposite. And obviously that's not, it's showing it's not a good thing to do the opposite of what Mr. Trump was doing economically and politically. So that is probably why the markets and cryptos and everything else are not falling, you know, running to the sky right now, is because it's going to be very clear that that is not the issue really. And you'll be able to see that here too with the, let's put this up there too. There. You see here, this is the S&P 500. That's what that is right there. Did the same miraculous type of bounce. Took a lot of work to really punish the whole thing there. Jumping from one side to another is even worse. I hear you. I hear you. Yeah, we've come up with a name of the indicator that I developed for the JForex. We call it the Manhattan indicator. We explained it yesterday, and we're gonna. And I think that Dukascopy should implement it. They should actually have a button that gives you the Manhattan indicator. Weren't there laws that would stop a new administration of drastically changing previous administration laws? There is structure, you know, the Constitution and so forth. So Mr. Biden can stop something, but he can't start his own, and he's got to get those things passed. So what happened was he stopped our pipelines and reduced our oil production for the sake of global, whatever they call it, that global religion thing for weather. And then from there he, you know, disrupted the law and order along the borders, and so, you know, a lot of it's going to the courts. They're fighting with each other. You know, it'll resolve itself as over time. You know, he'll be found, you know, as a big problem. Yeah, I think that I will, exactly. And I think that and I think that it could be a joint indicator that you guys have the power over, called the Manhattan indicator. What it does is it follows my mathematics in a not as up to date as my math is because of its, you know, its proprietary level, but this Manhattan indicator is better than MACD or any of these other public indicators out there. It's probably one of the best indicators out there I've developed on a public level where you can see the formula. So I will. I'll send that over to you. Perfect. I will, because you know, it's a really good tool. You can see how, you know, I use it every day on JForex, and I match it up against how well it acts with my work, and so I think it's something I will. I'll send it over to you. I'll do that over the next day or two. All right, looks like we're coming to the end of this. So this is Doc from North America. As we always do now, is we use the Manhattan indicator on JForex, an indicator with myself and Dukascopy that we work with every day now. And so this is Doc from North America. We will catch you all tomorrow, same time, same channel. And so, happy trails to you until we meet again. Happy trails to you, to all our Dukascopy friends. Catch you later, traders.